Now, electric mobility startup Yulu has turned Ebitda profitable and also crossed an annual recurring revenue of $30 million. This, it said, was achieved thanks to surging demand for quick commerce and food delivery services, as well as policy tailwinds. They said the revenues and users increased more than sevenfold in the last 2 years, and now they plan to deploy 100,000 EVs by next year. They're also looking to raise $100 million in a CVC funding round in the next year to power this growth. So for more on this, joining me now is Amit Gupta, the co-founder and CEO of Yulu, and also with me is my colleague Shruti. Amit, welcome to Startup Street. Thanks very much for your time here. You've become Ebitda positive, and you've also crossed that $30 million ARR milestone. What helped you get there? What were the key drivers in growth? But also importantly, when do we see you become PAT profitable?
Nice. So thank you for having me on this show today. Our growth actually has come from quick commerce, where we are seeing a lot of users now starting to get their products in 15 minutes. And we are seeing Blinkit, Zepto. Everyone is now powering this whole segment in a very massive manner. And what Yulu is doing, we are providing our vehicles to the gig workers who are looking to deliver for these platforms. And we are the most affordable and most efficient mobility choice. And what we are seeing in cities where we are present, which are Bangalore, Delhi, and Bombay, almost 35 to 40% of the deliveries on those dark stores are happening on Yulu bikes. So we have actually been to produce a very efficient service to power the quick commerce growth. And we believe that as and when more and more companies and retailers are offering quicker delivery, we will be powering all of those hyperlocal delivery.
All right. You did not answer the question when we asked when do you become PAT profitable. Amit, this is Shruti quickly stepping in. If you could start your answer with that. And also, your revenues and users have increased more than 7x over the last 24 months. Will this trajectory continue? And what would FY25 financials look like at the current rate?
Certainly. So if you look at our 2 years journey, our SG&A cost, which is the headquarter cost, remain almost same. Even last 6 months, the beginning of this financial year, revenue has doubled, more than doubled actually, but the cost remains same, and we see the continuous margin improvement. So while we do not know exactly when we will be PAT positive, but clearly within next 2 years, we are going to hit that spot for sure. It depends on some new opportunities we are gonna pursue. So depending on how these are shaping up, so we will have a good balance between growth and profitability. For us, Ebitda profitability was almost like a table stake. We wanted to get there. PAT positive is something we will actually see, but clearly, certainly 2 years for sure it will happen.
All right. You also have massive plans to scale your fleet to 100,000 by next year, and you'll do that by raising $100 million in a CVC funding. How quickly are you looking to do this? Who are the investors that you're in talks with? And will all of this 100 million only be used to expand your fleet?
So we have not hit the funding circuit. At the same time, we are seeing some very interesting inbound interest from many investors who are focused on energy transition and livelihood creation. So we believe that when we go out formally, talk to many other investors, we will be able to attract some top-tier financial institution investor for this round. And you are right, when we are looking at this $100 million in equity and debt, majority of this money will be in the form of equity capital, and majority of this money will be going towards growing the fleet from the current one to the next milestone what we are chasing.
Right, Amit, we also understand that you're eyeing a public listing in the coming years. What are your plans on that front, especially since you plan on raising this $100 million soon? How large will the size of offering likely be?
So size of the offering, very, very initial time for us to comment. But one thing we know for sure that Yulu is the market leader, and the opportunity in front of us where not only the energy transition is happening for the purpose of mobility, but also a major customer habit where everyone was expecting their product to come after 1 or 2 days. Now they're expecting it to happen in 10 to 15 minutes. And this is, I think, a historical time where someone like Yulu will play a very major role. So I think sky is the limit, and we will actually go after whatever is possible, which actually fits in our vision and mission for sure. As far as IPO is concerned, yes, we look at IPO as our exit opportunity for the current shareholders. And we believe that company is going to stay for decades for sure. And from a milestone perspective, I think getting PAT positive is an important one. We would like to hit that before IPO plan for sure. Within next two to 3 years, as I mentioned, I think that is a timeline which company is aiming to go for an IPO.
Okay, critical 2 years, Amit, PAT positive and an IPO in the offing. Thank you very much for your time here today, betting big on that quick commerce and food delivery, services really to ramp up your fleet. Many thanks for your time here.